Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin, taking a look at the most recent price action, taking a look at the news, the data and what has been going on in the space over the last 24 hours. Now as I get into today's video, if you find it useful and informative, smash that like button. I really do appreciate that. If you are new to the YouTube channel, why not go ahead and subscribe. If you're watching this on Twitter, give us a like and a retweet. Really do appreciate that as well. Above and beyond those things though guys, if you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is down in the description below on YouTube and in the link tree on Twitter. Let's go ahead and jump right down into the video and start talking about what has been going on with Bitcoin. We're going to start things off with our 1 hour time frame. Here we have Bitcoin paired up with USDT. We're using the BitGet spot exchange here for this one. So as you can kind of see, our expectation is to move down into this low range of 29,085 to 29,158. It's been a really slow, boring weekend so far. As we can see, very little volatility, just ranging sideways here. Ultimately, this is just testament to the fact that there's lack of volume in the market and just really not that much going on overall. Now, from here, we can see and we can acknowledge a couple of different things. One, we are still looking for this move to the downside and the fact that we have these kind of three-wave patterns moving to the upside here. Okay, we can see that this has potentially still got some legs in it to the upside. There's also a possibility that maybe our A wave is here and our B wave is actually still in play, which means we potentially could breach this 29,559 and then break down here at a later date. Okay, so there's a couple of different things to kind of consider within this structure here. And for the most part, we can consider that maybe this is potentially a triangle within our... Let me go ahead and just try to pull this on here, right? A triangle within our B wave pattern here as well, right? And we'll look for a breakdown from here. But ultimately, I think a breakdown is what we're looking for. I just don't think it's going to happen right away. So as you can kind of see, momentum is going to be shifting back up here in a moment. You can see we've completed this little three-wave move to the downside. So essentially, I think this is probably a better fit for this one. It would actually adjust things ever so slightly. I'm going to go ahead and take this move, and I'm going to go put it up here, 29,732. That's going to be our area where we're looking to kind of hold. I'm going to go ahead and remove this white line that we don't need anymore. Okay, so 29,732, that B wave shouldn't cross that level. There's only flat corrections could do that, and I don't think there's a need to see a flat correction here, so we shouldn't cross that high. But for now, I think, yeah, we could potentially see this B wave move up a little bit. And I think we're just not quite where we need to be yet, and then we'll see this drop to the downside at a slightly later date. So momentum shifting back upwards here, but I do think that we're going to see volatility later in today when we do finally hit our target range down here on this low side. Okay, so expect some small volatility during the early parts of Sunday here, and then I would be expecting more volatility latter part of the day as people try to go for their weekly close positions. Both the bulls and the bears will fight that one out. Anyone remaining anywhere, there aren't many participants by the looks of it in Bitcoin right now. No one's really buying, selling, being actively involved with BTC. I say no one, but hardly any. The volumes are incredibly low at the moment on Bitcoin. So we'll keep that in mind. There isn't much more to talk about on the hourly chart here. Just kind of keep in mind that we are looking for a little bit of volatility in the latter part of today. Let's go ahead and jump back up into the daily time frame. Okay, because we are still looking here reasonably strong. Okay, so as you can kind of see, we are looking for a brief correction to the downside. This will also allow us to correct our stochastic RSI. At the moment, we're finding support on the 50 EMA. This is an area of previous resistance. It's been resistance quite heavily here. I do not suspect that we're likely to hold this on our daily time frame. We're going to come down a little bit and find brief support in this lower range. As you can kind of see, we marked this up the other day. This area down here at the 28,294 to 29,176. This particular area is our demand area. Okay, every time the price action has come into here, it has reversed out pretty quickly and taken us up slightly higher. We still have weakness up at the higher ranges as we have those lower highs, but I do think that we are likely to see a break upwards here once we kind of come back into this range. We're looking to break out of our downward trend line and basically confirm that we are likely to move on out. Ultimately, we still see weakness within our stochastic RSI, so we do want to see this kind of correct down a little bit before we try to go up a little ways, because we are looking for that move up towards our 35,000 CME gap. Now, the other way of articulating and looking at this is you'd look at this as a potential bull flag situation. We have the pole here. Let me go ahead and show this, right? We have the pole over here, and we have the flag situation this side. This will obviously be the area that would have that break to the upside afterwards, right? Now, from an Elliott wave theory point of view, this is a three-wave pattern as well. We'd have our A wave coming up here, our B wave coming down here, and then we're going to be looking for that C wave break to the upside, right? So everything there is kind of aligning to ourselves. We are in this overlapping corrective structure at the moment. We are looking to come back down into our accumulation zone, but our demand zone at 28,294 to 29,176. Once we do this, I suspect we are going to start to see that break upwards, but we will hopefully have a nice correction on our stochastic RSI as well. The 50 EMA must be lost in order for us to probably move down closer to the 200 EMA. At the moment, that 200 EMA is sat at 27,243. So if we were to come down that low, I think that's going to be okay. It's going to allow us to have this good move to the upside. If we actually go ahead and measure our structure here and assume that we did come down to this low, which is incredibly low, but if we did do this, then we are still going to be right inside our target range here, okay, which would be right in between the 34,938 and 37,049. These are this is exactly where I think the price is likely to go, just short of that $38,000. It would be a three-wave pattern, a zigzag pattern in my opinion, and that is under the worst case scenario of coming down to that 200 EMA. I don't think we have to go down as low as that 200 EMA. The higher that this thing potentially goes, like I say, 28,289 for example, it actually lifts us up to more towards that 28,000 and on the low side to 36,000. So there's definitely some good stuff to be seen there. I think I'm going to leave the target range there for now so we can kind of see that's kind of where we're looking to kind of go across that larger time frame. Let's take this up into that weekly because obviously today is all about closing the weekly candle, right? And so what is the target range? What are we looking for on that weekly time frame? And well, if I throw the EMA on there, we got the 200 weekly EMA. I think I'm going to do is I'm going to add another EMA in here. Let's see, where are we? Let's see if we can grab that one in. And what I'm going to do is I'm going to adjust this as well. So we want this to be a 50 EMA. We're going to make this red to suit my other one, and I'm going to make it a medium thick line. There we go. Okay, so we have our 50 and we have our 200 EMA here on our weekly time frame. Let's go ahead and zoom into where we are right now. As you can kind of see, we're above the 50 and 200 EMA. However, our 50 EMA is acting as support after it was broken as a resistance line. As you can see it right in here, we obviously have the wicks below it, but we haven't closed below the 50 EMA. At the moment, the 50 EMA sits at $26,987, with the 200 EMA sat at 25,661. So we are actually in a pretty strong position here. Now, we are looking for a correction on our weekly in the same way that we're looking for a correction on our daily time frame. But ultimately, we are in a pretty good position, and we can, of course, rally on up into this previous area of demand. Okay, this sits between 34,324 and 37,713. No coincidence that our three-wave pattern within our data here on our daily time frame happens to coincide with that level as well. It seems to be that this is going to be the most likelihood or the most likely area for rejection. Okay, so we look for that break upwards, we grab the CME gap at 35,000, and then I think we're going to be moving down quite steadily from here down towards the CME gap that sits at the $20,000 level. Okay, so from our weekly chart, is there any kind of key area that the bulls are going to be looking for? Well, the bulls are going to be trying to clear a closed position probably above, and I say probably, yeah, it's going to be above 30,616. If a closed position above there is going to give them a little bit more strength. Ultimately, they'll be looking for a closed position about 32,289, but I don't see that being something that is going to be achievable right away. So I think they're going to struggle a little bit. The bears have slightly more power behind them, in my opinion, for closing that position slightly lower. They're going to be looking at trying to close below that daily 50 EMA, which we were talking about earlier. But for now, the weekly chart isn't too bad. We are looking for that move upwards. It is an overlapping structure. All of this is corrective, and once we kind of break down from here, I think we're going to move quite rapidly towards that 20,000 CME gap. Initially, we might find some volatility on that route to the downside, but for the most part, I'm not expecting too much from that. I think ultimately it'd just be nice and healthy to kind of see a correction down towards the 20k area. Catalyst for that could be so many different things, but let's go ahead and jump up into the world of data and news and see if there's anything major going on there. Okay, so obviously we'll start off by taking a look at the on-chain data that we hold for our members. This is membership.𝗕𝗘𝗪𝗏𝗀𝗀𝗀𝗏𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀𝗀 of the plans, so you can go ahead and check out what plan suits you best. Everything from the $14.99 a month AMAs, TA videos, and all that kind of stuff, all the way through to trading or full access, right? You get a 7-day free trial, okay, and basically you'd sign up to it, and if you don't want to continue, you just have to go to your profile and cancel that. Obviously, these are like any other subscription-based model. You go ahead and sign up, and you must cancel it. It's not something that we can cancel on your behalf. You just go to your profile and cancel it from there. But ultimately, I don't think you'll want to. I think there's going to be some fantastic things here that you guys are going to really enjoy. So try it for 7 days, and I think you'll stick around long term. That's kind of why we do 7-day free trials on all of our plans, so you can test it. Or try before you buy. That's the kind of terminology I was looking for. So in here, obviously, we have the exclusive videos, the course material for Elliott Wave Theory, smart money concepts, articles, airdrops, things like that, all the way through to what's happening with events, and of course the on-chain data. We're going to be talking about Bitcoin on-chain data, so we're going to load that up here. We have the overview of everything that's kind of going on with BTC from a top level standpoint, but I'm going to go ahead and focus in on those liquidations because it's been a really slow weekend. We can see in the last 24 hours we've only had $1 million of liquidations, which is actually really, really small. Binance tops out at 500,000, so the one with the biggest, or the exchange with the biggest amount of liquidations sits there as Binance at half of the total. 46% were long positions that were liquidated, and 53.6 were short positions that were liquidated. Reasonably balanced because we've just been ranging sideways. Again, we don't generally like to trade weekends unless there's a good reason to do so. So as we can see, Binance is 45.79% of the liquidations, OKX is 33%, Bybit is 14%, Huobi is 5%. It really just goes down into nothing after that. Ultimately, some interesting things going on from the liquidation side. From the wallet side of things, if we jumped up into the whales at 1,000 XRP or more, we can see that actually, yeah, they're not looking great for the last year or so. There's 2,018 wallets with over 1,000 BTC in them. Over the last 7 days, it's actually up 0.1%, but over the 30 days, it's down 0.69. 90 days, it's down 0.54. 180 days down 1.03, and in the last 365 days it's down 5.96%. Ultimately, it shows that there isn't really a backing from the large institutional investors. We take a look at the larger size wallet, which is the 10,000 XRP or more. 10,000 BTC or more. We can see there's 108 wallets here. Now, this was last updated on the 10th of August, so we're a couple days behind at the moment on this one. This isn't a me issue, it's not a data issue, it's an aggregation issue from the on-chain data. This will eventually come through. It checks every single hour for the most up-to-date information, so when it comes through, you'll see it here. But as of the 10th here, we can see that actually over the last few days, it hasn't been that impressive. They are in fact up only 0.93%. We can see that there's no change in the last 30 days. In the last 90 days, it's down 6.9%. In the last 180 days, it's down 6.09%. You can see here that this move to the upside from the lows of around 16,000 USD all the way up to the $30,000 USD area, and has just been exit liquidity. You can see these guys have been, dumping into this move to the upside, right? So it just helps you understand that this isn't really a move that is supported by the larger wallets. Now, as we come down into the more trader side, we can see even these guys are down in the last 365 days. They're not backing it either. This one was updated on the 11th of August. There's 15,865 wallets with over 100 Bitcoin, and they are still coming out of their positions as well. Taking a look at more the retail side, though, you see the opposite, because there's always a buyer, there's always a seller, and what do you see here? You see the larger wallets coming out and the smaller wallets coming in or increasing, right? A decrease decrease with large wallets, but an increase in smaller wallets. And so you can see over the last 365 days that 10 Bitcoin or more is up 4.65%, 1 Bitcoin or more is up 13.16%, 0.1 Bitcoin is up 17.86%, and 0.01 Bitcoin is up 14.8%. Essentially, retailers are buying into the move to the upside, believing that they're in a bull market, yet the larger wallets are basically just selling to the retail investors on this phony pump to the upside. Which brings me over to the news element of what we need to talk about, which is that debt, the US debt, has increased to record highs, right? So let's go ahead and jump into this, right? So the total amount of outstanding US debt hit a new record high. The number from the government's fiscal data system shows the national debt jumped $54.9 billion in just 5 days, after crossing the $32 trillion mark on June 16th. The total debt accumulated by the US has now surged to an additional, $658 billion as of the 10th of August. The record high comes as the United Nations issues a grave warning about the amount of debt being accumulated around the world. So according to the UN, the total amount of outstanding public debt has reached an all-time high of $92 trillion in 2022. That is a 5-fold increase since the year 2000, right? And so we have to kind of really consider here one of the fundamental basics. And people are out there telling you that we're in a bull market. People are out there telling you that there's plenty of liquidity to go in and create a bull market, when the reality of the situation is that there is no liquidity. There's very little liquidity, in fact, because we have an increasing in debt. They're borrowing money to survive. They're not having surplus cash to throw at a market. There's not like an abundance of liquidity to go into the market from retail investors. And retail investors are believing and potentially borrowing money to go into the crypto market, into buying those cryptocurrency assets. But that is going to be something that is going to burst. This isn't something that is sustainable. It's not sustainable to have a 5-fold increase in 20 years on debt. And we can see that out of the $92 trillion that is outstanding debt across the world, $32 trillion of it sits with the US alone, which is over a third of all the global debt. This is something that is quite remarkable and something that we have to actually think about in quite a little bit more detail. And essentially, it does mean that the idea of a bull market is something that's rather foolish. We can't believe that we're in a bull market when there is so much debt out there. In fact, what you need to see is surplus dollars just, being floating around everywhere. You need to see people able to afford to buy these assets. Instead, what you're finding is there's an increase in debt. Now, this debt could be for multiple reasons. They could be borrowing it to try to survive, keep a roof above their heads, because I do see the increase and surge in the interest rates being a global problem for mortgage rates and things like that. Specifically here in the UK, we can see that it's just absolutely ridiculous to even think about trying to get a mortgage right now. And the rates that you're getting are just absolutely astonishing. And I think for the most part, we're going to see other issues cropping up as well across multiple different sectors in the coming months and years. And I think ultimately this debt issue is going to cause a catastrophic event, which is going to basically potentially cause a cascading move to the downside on BTC. We can see it hasn't done much over the last several months. And I think if we hit that CME gap at $35,000, that this potential debt issue, along with the housing crisis, could be a catalyst to get us down towards 20K. And hell, if that doesn't hold, we might even go down into a new low. So we've got some potential issues and things that we need to kind of be thinking about when it comes to Bitcoin here. So this is a pretty big one. We need to be very aware of it. Now, let's go back up 1 second and talk a little bit around exchanges, because there's many different exchanges out there, and some have got rumors around insolvency, some have got just bad reputations and so forth, right? And there's a lot that's been going on since the FTX back in 2022. We did see obviously we saw Sam get arrested, which was great. His bail's been revoked. I thought that was a good thing. More jail time for some of these criminals for sure. But I think when it comes to exchanges, as retail investors, the best thing that we can do is set up as many different exchanges as we possibly can and get familiar with them, because we do not necessarily know. When we have rumors, we kind of dive into doing our research and trying to figure out which platforms work well, which ones are solvent, which ones are transparent, which ones are maybe not so honest, right? And ultimately, by signing up, registering, and getting familiar with all of these platforms, you're going to be setting yourself up for success in the future. Ultimately, you're going to want to make sure that you're familiar with each platform. You're going to want to know how to move money on, move money off. Do you need to do KYC? Do you not need to do KYC? Do you have to link bank accounts? What's the timeframes in these things? How quickly can you move money on? How quickly can you move money off? Because these are the things that are going to help you in the future. During these kind of moments of crises, whether it's FTX or 𝗕𝗘𝗪𝗓 or whoever is next, right? You might need to act fast. That might be that you need to move your cryptocurrencies off the exchange. You might need to move them to the exchange to liquidate them and then pull it off the exchange afterwards, right? Or your fiat off the exchanges. So you need to get familiar with the exchanges overall, right? Now, BitGet is my go-to platform. I use BitGet for 100% of my leverage positions, 90 to 95% of my spot positions, but it's not the only exchange I use. I use Binance, Coinbase, KuCoin, Gate.io. I use Bybit, Crypto.com, and so forth, right? And I'm familiar with these platforms and I know how to use them. So should something happen to my go-to platform that is BitGet, which I don't think it is, touch wood, ultimately I think BitGet's going to be incredibly fine. It's going to be the kind of platform that many people are going to actually rely on in that next bullish market. I think it's going to be very, very successful, and I think it's going to be perfectly fine. However, if something were to go wrong, I have backups and I have other platforms to be using. Now, I don't know what exchanges you guys are using. You might be using Binance, you might be using Coinbase. The only thing I would say here, guys, is sign up to as many as you possibly can. There's affiliate links in the description down below. If you sign up to BitGet, for example, you'll be eligible for up to $8,000 in rewards, depending on how much you deposit and trade on the platform. It is my go-to platform. I use BitGet every day. I found it very easy to use, very intuitive, and actually a really nice platform to be trading on. So why not check it out? Links are in the description below. Obviously, just understand the risks involved in trading. More details can be found in the Discord server as well. Guys, why not check it out? Affiliate links are in the description below. Set yourself up for success in the future. Of which, let's go ahead and actually start talking about some of the trades that have been going on. Obviously, it's been a slow weekend. We haven't seen many trades from our community, mainly because we just simply don't want to be trading these slow, boring, sideways trades. And also, it's higher risk because there's just little volatility, right? It might just reverse on you, might not hit targets and stuff like that. So trading weekends is tough. We don't normally tend to do it very often. We tend to look for the weeks, but we have got a few slips in here from our members. We've got 7.95% here on a 20x long position on Matic, which is nice to see. We have an FTM short on a 10x at 8.28%. We've got some Bybit ones here as well. We've got a 25x long on Doge, 25%. We have a 20% long on STG as well, a 25x. So as you can see, some good trading opportunities are still out there, even if it is just smaller percentages. Profit is profit, higher risk though, so it's not something for me, but it's great to see that the members have been absolutely crushing it. Like I said earlier, guys, if you haven't already checked out membership.cheekycrypto.io, there is a 7-day free trial. You can test out some of the things that we have to offer, including the free trial for the trader perks, including all the kind of signals that our Discord server gives out and all that kind of stuff as well. Lots of things to kind of talk about with that, so why not join us in Discord? You can ask the members their experiences as well before you try the 7 days. It's entirely up to you. Ultimately though, our members have been crushing it over the recent weeks, and it's great to see. I think I'm going to wrap this video up right there though, guys. If you have found this useful and informative, smash that like button. I really do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.